Tesla's ultimate reckoning. From golden glory to financial turmoil, the untold story. Ever wondered how a company that revolutionized the automotive industry and once symbolized innovation, sustainability, and possibility could crumble under the weight of its own ambition and controversial leadership? A groundbreaking brand that transformed every driver's dream into a futuristic reality, only to face an unthinkable financial and reputational collapse nearly overnight. At its peak, Tesla dazzled the world with a jaw-dropping $1 trillion market cap. But in 2025, that titan crumbled as its stock plummeted by a staggering 38%, leaving investors reeling and global markets in shock. Once a beacon of the electric vehicle revolution, Tesla's story is a tumultuous journey through sky-high valuations, wild innovation, and a rapid descent into crisis precipitated by a series of missteps and political entanglements. How did a company that symbolized American ingenuity evolve into a case study of market volatility and boardroom battles? Stay tuned as we peel back the layers of triumph and despair, ambition and controversy, to reveal not just a corporate downfall, but a shift in the very foundation of the modern financial landscape. Humble beginnings. In a world where financial trends shape our society and risk is measured in billions, Tesla stands as a compelling case study in audacity, innovation, and resilience. Founded in 2003 as Tesla Motors, the company was more than just an automaker. It was a visionary technology enterprise born out of desire to redefine what was possible. From the spark of its early days, with pioneers like Martin Eberhard, Mark Tarpenning, and later joined by Elon Musk, Tesla captured the imagination of investors and customers alike. Its early promise was bolstered by the groundbreaking Roadster, a sports car that not only delivered exhilarating performance, but also signaled that electric power could be both fun and sustainable. Over time, Tesla's ambition grew, evolving with each new model: the luxurious Model S, the innovative Model X, and later the mass-market Model 3 and Model Y. Each iteration brought challenges and triumphs, making Tesla a roller coaster of financial feats and pitfalls. Notably, the company was never just about cutting-edge technology. It was about the risks taken, the investments made, and the volatile market that both cheered and condemned its every move. But as the financial world watched with bated breath, Tesla's journey began to diverge from the conventional path of success. What started as a beacon of innovation soon transformed into a battleground for financial analysts, investors, and political power brokers. Critical decisions, aggressive production targets, and unforeseen controversies exposed not only Tesla's brilliant innovations, but also its vulnerability to market whims and political crosswinds. The Golden Era. Tesla's golden era was marked by a meteoric rise that captured the world's imagination and redefined the automotive landscape. In its early years, Tesla was not merely an automaker. It was a bold experiment in technology and innovation. The introduction of the Roadster in 2008 shattered preconceived notions about what electric vehicles could achieve. With its sleek design and impressive performance, the Roadster demonstrated that sustainable energy could be exciting. Investors and early adopters were captivated by this daring vision as Tesla transformed the electric car from a niche concept into a mainstream possibility. Following the success of the Roadster, Tesla launched the Model S in 2012, a luxury sedan that combined groundbreaking battery technology with an opulent driving experience. The Model S set new standards for safety, performance, and environmental responsibility, earning numerous accolades and solidifying Tesla's reputation as a leader in automotive innovation. It was during this period that Tesla's stock began to soar, mirroring the public's growing confidence in the company's vision and potential. As momentum built, Tesla continued to push the envelope. The introduction of the Model X SUV in 2015 and the more affordable Model 3 in 2017 expanded Tesla's market reach and cemented its status as a disruptive force in the global auto industry. Each launch was a spectacle, with Tesla's product unveiling events garnering widespread media attention and igniting fervor among consumers. The company's innovative approach is further exemplified by its foray into energy solutions, with products like the Powerwall and PowerPack, which aim to revolutionize home and grid-scale energy storage. During these golden years, Tesla not only revolutionized the automotive sector, but also became a symbol of modern financial ingenuity. Its initial public offering in 2010 marked a pivotal moment, elevating Tesla into the league of high-flying tech giants. Investors were drawn by the promise of exponential growth fueled by technological breakthroughs and visionary leadership. Elon Musk, with his ambitious goal and bold strategies, became synonymous with Tesla's relentless drive to change the world. His ability to attract top talent and secure significant investments played a crucial role in fostering an environment where innovation could thrive. The golden era of Tesla was a time when the company exemplified the fusion of technology, design, and financial acumen. It represented the harmonious convergence of visionary ideas with the pragmatic demands of the market. As Tesla soared to become one of the most valuable automakers in the world, its achievements during this period set the stage for the dramatic challenges that were to come, leaving an indelible mark on the annals of automotive and financial history. Every milestone of these formative years were testified to Tesla's bold ambition, strategic risks, and an uncompromising vision drove groundbreaking innovations and reset market expectations. Headlines celebrated its triumphs, while analysts acknowledged its rapid growth. Tesla's golden era not only established its revolutionary legacy, but also redefined what was possible. This period reminds us that when visionary ideas meet courageous execution, an enterprise can achieve extraordinary heights, truly beyond all limits. The crisis emerges. Tesla's meteoric ascent soon gave way to a full-blown crisis that rattled its storied legacy. Once heralded for revolutionizing the automotive and clean energy sectors, the company began to show signs of stress that no amount of early success could mask. Investor confidence eroded as a perfect storm of internal missteps and harsh external pressures converged. In the wake of production delays, skyrocketing costs, and fierce competition from both established players and nimble newcomers, Tesla's once unstoppable momentum faltered. The company's flagship stock, emblematic of its high-flying ambitions, started to falter as markets questioned the sustainability of its explosive growth. Key financial indicators painted a stark picture of decline. On April 7, 2025, Tesla's shares tumbled by 9.2% to a mere $217.41 amid a broader global equity sell-off, a dramatic reversal from the soaring heights it once enjoyed. This plunge was compounded by major revisions in analyst estimates. Wedbush Securities analyst Daniel Ives slashed its price target by over 40%, dropping it from $550 to $315, as concerns mounted over the impact of President Trump's aggressive trade policies and Tesla's increasingly tarnished brand image. The fallout was not confined to a single market. Across Europe and in key emerging sectors, the ripple effects of these financial misgivings became impossible to ignore. Adding fuel to the fire were the numerous external pressures that converged on Tesla's operations. U.S. tariff policies, particularly those targeting Chinese imports and imposed as part of Trump's broader trade strategy, intensified supply chain disruptions. With significant components sourced from overseas, Tesla found itself grappling with escalating raw material costs and erratic global logistics. This, in turn, strained production capabilities and led to a sharp decline in vehicle deliveries, as reported in the first quarter's dismal performance that fell far short of the optimistic projections of previous years. Meanwhile, Commerce Secretary Howard Lutnick's earlier bullish assertions that Tesla stock would never be this cheap again felt like a cruel irony as the market rapidly shifted its sentiment. Musk's controversial political affiliations further deepened the crisis. His open support for divisive political figures in his controversial role as a top advisor in the Trump administration not only polarized Tesla's consumer base, but also turned the company into a lightning rod for public and political scrutiny. The brand, once synonymous with breakthrough innovation, became embroiled in heated debates, protests, and even vandalism. In cities across the US, anti-Tesla demonstrations erupted as disillusioned fans and skeptical investors alike took to the streets, challenging the company's dwindling image. Such public dissent, amplified by relentless social media scrutiny, worsened the financial hit, pushing many industry experts to warn that the lofty valuations built over a decade might have been nothing more than a house of cards, waiting for a gust of political winds to bring it down. Within this maelstrom, financial shockwaves reverberated throughout Tesla's balance sheets. Earnings reports that once heralded robust growth gave way to alarming figures: declining vehicle deliveries, deteriorating profit margins, and a relentless tumble in stock price that sent ripples through the investment community. Short sellers found fertile ground, with Tesla stock becoming one of the top 4 equity shorts in notional value, facing bets that further depressed the market. The cumulative financial shock was not just a temporary blip. It signaled a seismic shift in investor perception, with major Wall Street players revisiting their risk assessments and fundamentally questioning the company's strategic blueprint. The crisis deepens, internal strife and market collapse. As external pressures intensified, Tesla's internal landscape revealed deep fissures that further accelerated its downturn. The rapid expansion strategy that had once driven the company's meteoric rise, characterized by ambitious gigafactory projects, revolutionary battery innovations, and aggressive entry into global markets, began to falter under the weight of mounting financial and operational setbacks. Geopolitical tensions and newly imposed tariffs, particularly as the US escalated its minimum tariff rate on Chinese goods to a staggering 145%, wreaked havoc on Tesla's carefully constructed supply chain. This upheaval not only disrupted production schedules, but also added substantial cost pressures, undermining the financial viability of its expansion plans. The market's reaction to these compounded challenges was swift and unforgiving. Prominent analysts, spurred by dismal quarterly reports and an avalanche of negative news, slashed their long-term forecasts. Tesla's brand, once resilient, was now under siege, a casualty of both its own leadership miscalculations and the vagaries of global trade policies. For instance, amid reports of the stock dropping nearly 40% for the year and a dramatic 55% fall from its record highs in mid-December, investors were left reeling. Within the corporate corridors, internal dissent began to surface. Disgruntled employees and anxious board members, disillusioned by Elon Musk's unpredictable and often polarizing leadership style, started to raise concerns publicly. Whispers of internal fracturing, once a virtually unheard of phenomenon in the company's hallowed halls, grew louder as allegations of mismanagement and strategic missteps began to circulate. These internal conflicts not only exposed the vulnerabilities within Tesla's management team, but also served as a stark warning to investors who had long relied on the mythos of Musk's visionary command. On the front lines of the crisis, public demonstrations escalated into widespread, organized protests that directly targeted Tesla's facilities. Vandalism, sporadic acts of arson, and even isolated instances of physical attacks on service centers underscored the intensity of the backlash. Critics argued that the brand's transformation from a symbol of innovation into a political battleground was irreversible. With each act of defiance, from the chalk protest signs outside service centers in Pasadena to the viral images of burning Tesla charging stations, the company's image suffered further blows, intensifying an already dire financial predicament. The repercussions extended well beyond the immediate market reaction. International trade disputes, with the EU and China imposing reciprocal tariffs on the US imports, further compounded the challenges. As analysts like those at UBS and Goldman Sachs adjusted their price targets downward, predicting a future where Tesla's market outlook might be nothing more than a steep downward trajectory. The company's global footprint, once its competitive advantage, was now seen as a double-edged sword. Every new tariff announcement, every public outcry, and every adverse media report contributed to a growing chorus of doubt about Tesla's future. Current state and future prospects. Today, Tesla stands at a critical juncture, navigating a landscape fraught with volatility and uncertainty. The company's recent performance has been a rollercoaster ride in the financial markets, with stock prices swinging dramatically in response to global economic pressures and shifting political winds. Just last week, Tesla's shares tumbled by over 7% in a single day, reflecting the intense pressure exerted by regulatory changes and tariff policies. At its core, Tesla remains an ambitious innovator, still pushing the boundaries of electric vehicle technology and sustainable energy. However, the persistent challenges of production delays, supply chain bottlenecks, and a fiercely competitive market continue to cast a long shadow over its future prospects. Analysts are divided. Some see the current turmoil as a temporary setback, a market correction in an industry marked by rapid change, while others warn that the issues are symptomatic of deeper structural problems that could undermine Tesla's long-term viability. The company's aggressive expansion plans, including new gigafactories and the development of advanced battery systems, are designed to secure its position as a global leader in clean energy. Yet these initiatives come with significant financial risks. Investors are watching every quarterly report with cautious optimism, aware that each new production milestone and every technological breakthrough carries a potential to either reaffirm Tesla's pioneering status or signal the beginning of its undoing. Political factors, too, have played a certain role in Tesla's current state. Recently, the company has been caught in the crosshairs of international trade disputes, with tariffs and counter-tariffs adding to production costs and complicating supply chains. High-profile political endorsements and controversies involving CEO Elon Musk have further polarized public opinion and investor sentiment. Amid this backdrop, legal challenges and consumer protests have added to the company's woes, making it one of the most scrutinized enterprises in modern finance. Looking forward, Tesla's path is uncertain but not devoid of opportunity. The future may hold a renaissance for the company if it can successfully address its operational challenges and restore stakeholder confidence. Experts emphasize that innovation remains Tesla's strongest asset. With significant investments in autonomous driving technology and a potential shift to renewable energy solutions, there's still a chance for a dramatic turnaround. However, the road ahead is steep, and the company must navigate an intricate web of market forces, regulatory hurdles, and competitive pressures. As we assess Tesla's current status, one thing is clear: the stakes are higher than ever. The coming months will be decisive in determining whether Tesla can reclaim its former glory, or if it will continue to struggle under the weight of relentless and market scrutiny. Investors, consumers, and policymakers all await the next chapter in this high-stakes financial drama, hopefully for a breakthrough, but bracing for potential setbacks. In summary, while Tesla faces formidable challenges, its legacy of innovation provides a foundation for possible recovery. The balance between risk and reward remains delicate, and the coming period will be pivotal in shaping the company's future trajectory. A decisive moment is fast approaching. Tesla's journey from its pioneering golden era to the heart of a deep financial crisis illustrates the volatile nature of modern business. This saga, filled with soaring highs and dramatic lows, reminds us that innovation and risk are inextricably linked. As the company contends with current challenges, the future remains uncertain, yet filled with potential for renewal. What will determine Tesla's next chapter? Will strategic adaptations and renewed investor confidence reverse its decline? Or will mounting internal and external pressures cement its status as a cautionary tale? Only time will reveal the true outcome of this high-stakes financial drama. Thank you for joining us on this in-depth exploration of Tesla's turbulent path. Stay tuned for more insightful stories that unravel the intricate dance between ambition, innovation, and the unforgiving realities of the market. Until next time, keep questioning, keep analyzing, and let the lessons of the past inform the promise of the future.